like it's scary, honey. Yeah.
Hey guys, welcome back to another video. Today you join me in an E-Class. This is my courtesy car actually while my Lambo is just getting fixed. But today it's not about cars, it's about property. Now I know you guys have been enjoying the property videos so far. So today what I decided to do is meet up with a guy who's actually a mortgage broker. And hopefully he can give you a little bit of an insight into how you can get involved into your first property, whether that's an investment in a buy-to-let, whether that's actually buying your own first home, or whatever it might be. He can answer those questions for you. So it's specifically on getting loans and things like that. I've actually posted something small to say, ask me some questions on one of my last posts. So I'm going to be answering a few of those as well, or hopefully he'll be answering them for me. And of course, you guys know that I like food. So I've brought him to a place called The Pineapple. This place is actually outside of London. Amazing sandwiches. They've got incredible reviews. I don't know if I'm more excited about the food or getting some good content, but yeah, they've got an amazing Christmas dinner sandwich, which is the same thing I order every time. Look at the interior on this. I love this. I don't know if anybody's been seeing recently, I posted something about me getting a Mercedes, and that is actually going to be happening. I am working on it as we speak. It might not be exactly what you guys think, seeing as you know I like performance cars, but that's all I'm going to say on it now. Anyway, let me go inside because he's probably waiting for me, so I'll see you inside. Right guys, so as I said, apologies if there's any background noise, but we are in a restaurant like I said. We are now going to go through some questions. Now some people have asked me some questions that they've written under one of my Instagram posts. Akhil, I should introduce him. Thanks a lot for joining me.
You're welcome.
So you are a mortgage broker?
Yep, I am. Thank you.
No worries. So hopefully you guys are going to find this useful, but I'm going to ask some questions and some generic questions as well. Some you've asked, some I've kind of set up so that you can obviously give some people some information.
Sure.
But let's start off with one of the ones that kind of we've set up. So people are asking, I'm a first time buyer. What are the initial steps that I should take in terms of getting a loan, or whether it's for a residential property or it's for a buy-to-let?
Sure.
Yeah.
That's a good question. It's a question that crops up very often. The first thing I suggest to all my clients are simply approach a credit reference agency. Someone simply like Experian or Equifax. This gives you an insight into your credit profile, what's in the background, what credit you have against your name. Sometimes you have credit facilities against your name that you have no awareness of. So it's good to definitely check what your credit status looks like, and it is scored, particularly with Experian, or it's rated with Equifax for that example.
So that's something that somebody's actually asked in the questions. That answers two questions. So somebody says, I'm thinking about buying a housing apartment in maybe a year or two. What is it that I should be doing to kind of build up my credit score? I can kind of answer that as well, and I'm sure you'd agree. Yeah. So building up a credit score would sometimes be using like a credit card. If you use a credit card, that's the first way you can show that you're essentially borrowing money by paying for something and then paying it back at the end of the month. And it's slowly kind of showing the banks. It's a report that's been built up saying this is a good person that we can lend to because they are essentially paying money back that they're loaning. Other ways to kind of build up your credit score will be by taking smaller loans. So let's say if you're taking a loan out on maybe a car purchase or something else like that, when you build up your credit score in that way, that can also help. And then again, when they do a credit check on you to give you a loan or something, it's going to be the same thing, isn't it? They're looking at those kind of your previous things. If you guys have missed payments, that's not a good sign. It's just setting a precedence. Yes, the amount that you'll be paying for, say, a loan on a property is going to be a lot more, but on a car it's going to be less. But again, it's the same principle. So essentially, that's it. So let me ask another question, which somebody has answered. They said, how can you get a mortgage without offering any type of security, so to speak? So normally when you guys take out a mortgage, if you're taking out a mortgage on a property that you own, they're taking the property as a security. I think maybe this could be tailored more to maybe if somebody's doing like say a development project, or maybe they're doing an investment. How could they maybe get a loan but not actually provide something as a security in the first instance?
It comes back to the lender finding what's secure in the background. So the key thing is to ensure that the lender has security in the background, and that can be simply from the ninth lender, the ninth biggest lender in the UK. And I don't know if you're aware of this, but it's Bank of Mum and Dad. So Bank of Mum and Dad are the go-to people for a lot of first-time buyers or people that simply need to put up security as a guarantor. To enable first-time buyers to get onto the ladder and move out of their residential home.
So otherwise, most of the time, somebody who's lending you something, whether it's for a property or anything else, they want to take something as a security. When they lend against the car, they want that as a security. So put it simply straight, unless you've got somebody else who can kind of sign as a guarantor or anything else, it's going to be pretty difficult. But if you guys are actually buying a property, then it's going to be the property that's going to be providing the security itself.
That's right. Yep. And just look out for some deals. There's lots of developers out there that offer incentives. So you put in 5% cash deposit, and there are the developers out there that'll put a 5% incentive in as well. So you may only need a 5% deposit deposit. So contact a broker, a mortgage broker that can help and give you advice with that. So it could be joining the property ladder with as little as 5% deposit.
Yeah. Okay, now speaking of percentage deposits and also speaking about when you're taking a loan, one of the questions that's important here is what is the kind of implications when the Bank of England, like in the UK, increases interest rates, and also in different countries when they increase interest rates. Now that affects people who want to go and borrow money.
Yeah.
So in this country, something like the Bank of England, they increase the interest rates, which they have done recently. How is that now going to make an implication on people who are paying back their mortgage or who are going to go and get a new mortgage now?
Yeah, good question, Anish. Now, every country has a central bank, and what that means is banks borrow to one another, and it sets a limit, an interest rate of what they pay back at their borrowing levels. So to put it in simpler terms is, a bank will borrow from a bank, ideally overnight, and they'll pay a certain spread, so a certain interest rate. What that means is, ideally, the central bank for the United Kingdom is the Bank of England. They meet once a month and they hold an MPC meeting, and they dictate where the interest rates are, and it's loads of variables that play a factor into whether they're going to increase rates, keep rates where they are, or decrease rates at times. Now, we've had a rate increase after 10 years in the UK, so a lot of people that have taken mortgages out in the last 10 years have not seen a rate increase. Now, the Bank of England base rate now is at 0.5%. It's a very historic low. It was at 0.25, as I said, for the last 10 years. Simply, what that means in simple terms is anybody that is on a standard variable rate mortgage or on a tracker rate mortgage, their mortgage payments are going to be increasing from the 1st of December, typically. So there are apparently about 3 million standard variable rate clients out there that are on standard variable rates with numerous lenders who are paying probably between 3 and 4%, who are going to see a rate spike, an increase in their monthly repayments from the 1st of December. I tell a lot of my clients, and I've had lots of conversations with these clients, to speak to a mortgage broker to determine whether the rate that they're on is the right rate for them. A lot of people have different plans with their mortgages, but I would suggest speak to a mortgage broker, and he or she can give you advice whether a new fixed rate term is more ideal, and it could save you a lot of money. We've saved numerous clients in the last sort of 30 days tons of cash in the lead up to Christmas as well. So speak to a mortgage broker before you get a nasty shock on the 1st of December. Rates are going up at the moment. There's Mark Carney, who's the Bank of England governor, has indicated further rate rises. Who knows? As mortgage brokers, we look at the markets like Anish does every morning.
And that's important as well to mention, is that interest rates, just for the people who need to understand exactly what they are and why they have an impact. Interest rates are there in order to kind of sometimes stimulate the market or sometimes control things. So if the economy is not doing that well, what they'd do is that they would drive the interest rates down, and if they bring them down, it essentially makes it easier to borrow money. It makes it easier to kind of invest into the market. So when the interest rates have been low over the period of time, it's because the economic market has not been that great, and now things are starting to pick up slightly, and what they're doing is that's almost confidence kind of boosts, is that say we're increasing interest rates with that time. So just an insight for that as well. Okay, now before we stop to eat some food, because that's obviously very important, why should somebody use a mortgage broker instead of going to just a bank and trying to just get a mortgage directly from them?
Another good question. The simple answer is, going to a high street lender, they'll only give you one option, which is their option. They'll give you one set of rates, which is only their set of rates. Now, when you go to a mortgage broker, they have access to the entire market. So what that means is, for example, Anish will come to me and say, Akhil, I'm looking for a certain deal. How can you help? Well, what I'll do is I'll go out to 100 plus lenders to determine what the best lender is out there, to ensure that it fits his criteria, his suitability, his payment terms, and his overall goals and plans going forward. As an independent mortgage broker, we have access to the whole of the market. It gives us the opportunity to research the whole market and give a comprehensive solution to, for example, clients like Anish for their plans going ahead, and it ensures that we're not just giving a one-dimensional view, we're giving a whole view from the whole spectrum of lenders out there.
Now, a mortgage broker, this is one thing, a lot of people think the mortgage brokers are out there to make money and that's all they want to do. Just so it's clear for people, do the mortgage brokers actually do some mortgage brokers take money from the client themselves? Do they take it from the lender themselves? How does it actually work? Because are you working for us or are you working really for the lender?
Yeah, we're definitely working for our clients. There's no two ways about that. It's the broker and the client versus the lender. Now, we ensure from day one we get to determine what the client's expectations are, what their statuses are, so whether it's from a credit point of view, from the deposit point of view, and their overall plans in property, and if they've got any investment properties in the background.
Now, to an important question after the lunch break. So stop midway during the questions just to eat some food, and honestly I wish I was getting paid by this place to say this, but the sandwiches here are incredible. I'm halfway through. Remember to check it out, it's called the Pineapple. They're based in like, I think, Eton Dorney, Windsor area. Freshly made. I think it's like $7.95 for a sandwich. How are you enjoying yours? Good?
Yeah, very nice, thank you.
Right. Which one are you having?
I'm having the Big Banger.
Big Banger.
Definitely recommend it.
So sausages like onion chutney. I've got the Christmas dinner, which is literally a Christmas dinner. Turkey, it's got sage and onion stuffing and then a cranberry sauce and it's with chips. It's like I said, £7.95 and you get this huge helping. Okay, back to the questions. Okay, so we're back after lunch. I'm full. Food was amazing. Make sure you check out the Pineapple, like I said. You like the food, right?
Yeah, it was lovely.
It's really good. It's super fresh, like it's amazing. So back to the questions, which is why you guys are here. Let's start off straight away. So, first question is, if I have a low/insufficient income, which again, this is a really popular thing, how do people actually build a deposit up? Because when they're looking to lend, they're going to need a deposit, that's how it works. How do they kind of save up to get a deposit, or how do they get that deposit?
Well, the simplest answer is get a job.
Yeah.
Save money, cut back on outgoing such as restaurants, bars and foods and drinks, and any other social habits that you may have that you can put to a side for the moment. If your ambition is to grow and join the property ladder, I would suggest, cut out those habits where possible.
Yeah.
And just work. Anish and I have been working for many years now.
Yeah.
We've grown our own portfolio books, and it's just simply because of determination and self-belief.
Yeah. So I think a lot of people think a lot of the time, and I'm kind of addressing something here which I probably shouldn't normally address, is that a lot of people think, oh right, well, your mum and dad are giving you money, or you've kind of just been given a silver spoon, so to speak. So people who know me and people who've kind of met me and talked to me about stuff, and even people who've come along to like the seminars and things that I do teach, kind of understand where the money started. So from my point of view is I really always wanted to get into property. I couldn't get into property because I wouldn't get anybody to lend me any money, because I had not necessarily no track record, but I had no track record of lending at all, which I've said, if people start using credit cards, start doing those things, it builds up a record. But my thing started from me actually investing in the stock market and by trading. So my thing is that not everybody has to go and start investing in the stock market, but I think what you guys should go and do is look for ways where you can start building up deposits. It can be buying maybe something that will get you £20,000, because across the UK and in different countries in the world, it doesn't mean all properties are at like a ridiculously high price. Here in the UK, you can actually buy property up north in places like Derby, in places like Hull, which maybe not might be the best area to live. However, as investment places, they're actually great, and those properties can be anything from like £30,000, £40,000, £50,000. So personally, in investments and things that I've done as well, which you guys should know about, is buying places that are about £40,000, which only cost about £10,000 to do up, but selling them for 70 or 80,000. So it's again working with small amounts of money. Not every single deal has to be worth $1 million. Not every single deal has to be hundreds of thousands of pounds. So even if you guys have saved up 5, 10, 15,000 just from a little bit of work, small investments here and there that are working, things like compounding interest, that people don't seem to think about these days. We'll talk more about compounding interest in another video, but building up a deposit that way is a fantastic way, and don't think you have to save 100,000 or 50,000 or 60,000 just in order to buy a property. That's not the way it works. It's as simple as that.
Yeah, I think the key indication is if you look at websites like, for example, Rightmove and Zoopla, just log on there and look at properties within your price banding of where you can invest into. Now, as Anish said, a typical example is places like Hull, Derby and Liverpool, for example. A lot of my clients invest there simply because their yields are quite high out there. The yields are great.
And remember, yield, guys, is how much money you're making back on a property. So if you're renting it out, the kind of the percentage return you're making on a yearly basis. Yeah. Sorry, as you were saying, but those places are great to invest as well.
Yeah, you get a high rate return on your investment and your buy to let, and it gets your foot onto the door. And then one day, once you build up accumulate enough cash in the bank or for deposit, then perhaps you may want to look down south, particularly in London or Knightsbridge, and buy one of those large penthouses for numerous millions of pounds. But no, start small, like I did, and Anish said as well. We haven't got that silver spoon. Look at other alternatives. There are alternatives out there, and I suggest look up north. There's no harm in it at all. There's beautiful homes up north, and you can get for a fraction of the cost down here in London.
Yeah, and I just want to make a point as well, because I do mention things about like the silver spoon or people giving money. There is actually no problem if somebody has been given money to start with, to start a project. There are actually people that follow me who says, listen, a family member has passed away or something's happened and I've been left, say, £100,000. Now, does that mean you've been left a silver spoon because you've been left money when somebody's passed away? I wouldn't say. If you're doing something smart with that, that money. It's actually something good. So, you know, if you've been left a huge amount of money through inheritance or whatever it might be, working with that money and making it smart and turning it into $1 million from your investments is not the easiest thing to do. So it doesn't make a difference whether you started from 5,000 and made it into 50,000, or you started from 100,000 and you made it into $1 million. So I think that's just kind of important to know, because there's this whole thing about, you know, people with the silver spoons and everything. Everybody comes from different walks of life,
Sure.
and I think that's just important to mention. Now, final two things. I think a few people have given me some questions when it comes to actual developments themselves, asking me personally that how can you kind of save money, and one of the top things was things that are expensive are like kitchens. Now, I don't know about your personal experience, but I tend to use companies that maybe like Magnet and also Howdens, which give you kitchens that are actually at a trade price. If people want more information about how to source the stuff at a trade price, I'm going to leave my email in the description below. Send me an email and I can kind of refer you to the places where you need to go, because that was one of the biggest things that came out of one of the last videos. So that's number one. And the second thing is that if people are interested in learning more about property, as I've said, you guys know that I run a seminar. They're pretty much fully booked, but I believe the next one is on the 17th of December. I will leave the descriptions below. If you guys are interested in taking out a mortgage, if you are interested in doing anything with regards to buy-to-let, because I have received quite a few messages about people saying, I have saved up this much amount of money and I'm now looking to buy my first property, but I don't know where to go to get my first mortgage. I will leave Akhil's details in the description below as well, so feel free to contact him as well. And like I said, he's going to give you information that you guys kind of need to start off with, and then when you're actually looking to get it, that's where stages come in, where you'll say, right, I want to move something forward, and then we can talk about costs, etc. Kind of form your whole package when you want to get your first buy-to-let or your mortgage. So I hope that's answered all of your questions. If you like this video and you want more information like this, then please let me know in the description below. Big thanks to Akhil for joining me today as well. I appreciate you reaching out and also us getting in contact, because I think it is useful for people to have this information. A lot of people think that everybody knows this, and they actually don't. You'd be surprised the amount of people that you meet who you even think have an investment portfolio who don't know half of this information. So thank you so much, and hopefully I will see you guys in the next video. But remember to like, subscribe, do all the other bits, and I'll see you again soon. Bye.
I'm a machine.
Dope boy magic. Ooh, yeah.